Welcome. This is your host Raja Banks from the New York Session live streams. First of all, I want to welcome everyone who joined Market Fluidity. You have made the best possible investment towards your Forex education. Now, all you need to do is to stay disciplined and do exactly what we say, right? So basically, what we're going to go over today is going to be impulse entries. And like a lot of you people have been asking me, hey man, how are you able to have zero losses? What was the reason? Now, the number one thing I want to talk about is I want to talk about New York sessions first, right? So normally what happens is sometimes, when I come onto the live streams, you'll see that there's going to be so much volume from London session that price is just moving like this, right? So this is a very crude example of a market structure. So now I want to ask this question to everybody there, right? What's the bias over here? What's the market structure at this point? I would say like a very smart person is probably going to say, okay, yeah, like, you know what? The market structure here is bullish, right? Very easy, very simple to understand. It's a bullish market structure. Now, let's start reading how this market structure has gone bullish, right? Because it's really important for you to understand what candles mean when they're forming, when they're in momentum, when there's a lot of volume. You need to understand what these candles mean. Now, it's really simple, right? So basically, let's suppose we had a support down over here, right? Price moved up. This candle closed bearish, right? Candle closed bearish. We had another candle closing bullish, so we formed a minor support at this point. Price moved further up. Now, when price is moving bullish, it's really important to know that, okay, there's always going to be a high created. And whenever there's a high created, there's going to be a pullback. And after that pullback, there's going to be a support made. And once that support is established, then you have an opportunity to take a buy, right? So if you look at this position right over here, where do we have a high created? Can someone answer me? The person in the back, I see you. I see you're in your bed right now. You're in your bed right now. So basically, a high is created right over here, right? We have a high created right here. Price retraced, came down. So when this candle formed bullish, right? This is where your support has formed right over here, right? So now, a lot of times, guys are going to take buys right at this point, and what they're going to do is they will anticipate the next candle to continue moving bullish. Is this correct? Who has done this before? Have you done this before? I've done this before. Man, I used to do this all the time because, I'd say, okay, like, you know what, the candle's closing bullish. We're in a bullish trend. We're making support. And next candle, if it respects this low over here, it should continue moving up and then all the way up, right? But wrong. You have to understand there's a resistance right over here, right? There's this resistance. So you have to measure to see how far this resistance is, right? If this resistance is around 20 pips away, right? Or let's say if this resistance is around 25 pips away, then it makes sense to take a buy, right? It makes perfect sense to take a buy. But more often than not, this resistance is hardly going to be like 10 pips, maybe it's going to be like 15 pips. And to top it off, this resistance might be even 8 pips, man. And if you're taking a buy in an 8 pip range, it's not going to work. Obviously, it's not going to work, right? So the best case scenario in this situation is to wait. To see if the next candle breaks this high, and then you can take a buy position. Now, normally last week and the week before that, when I had no losses, this didn't happen. Price never broke this high over there. What essentially happened was that price broke support right over here. And that's what we're going to talk about. This is the setup where I had zero losses. Each and every time this setup played out, I executed on it. I managed my risk. I took profits, took partial positions, and called it a day. Right? Really simple. Now, basically what you want to look for is all you have to see if we will break this low or not. For example, let's say this is the 1 hour time frame before someone asks, hey man, what's the time frame, right? So let's say it's a 1 hour time frame, or let's say this is a 30-minute time frame. Normally on the 15-minute time frame, you can also catch these moves on the 15-minute time frame, but you need some sort of experience, practice. I mean, you want to see it happen over and over again so that you can have that sort of intuition that's going to work out, right? So let's suppose that this support is being held, right? What you need to see a candle, a bearish candle, come down like this, right? We have a bearish candle forming right at support. So when you have a bearish candle forming at support, can we take a sell at this point? Any answers? No, we can't take a sell because we're at support. But can we take a buy at this point? No, we can't take a buy because the candle is not bullish. The candle is bearish. So taking a buy would make no sense at all. What would make sense, however, would be to wait for the next candle to break the low right over here. Because if the next candle starts breaking the low at this point, then there's a higher probability price can essentially correct this move up. Make sense? So for you to understand how it's going to break the low, it's really important to understand how trends are formed, how candles form in trends, right? So when price is breaking the low, obviously there's a higher chance for it to make a lower low. And this is what we call an impulse entry, right over here. As the next candle starts breaking the low at this point, you're taking an entry right over here, right? You're taking an entry right over here. Your conservative stop loss is way up over here. That's a conservative stop loss. We also discuss aggressive stops. That's most likely better explained in our database if you're part of the market fluidity. If you're not, that's still okay. This will still help you. Conservative stop goes up over here. As this candle starts breaking the low, you're taking an impulse entry and you're anticipating the next candle to continue moving down, form a bearish candle, and then we can obviously continue down towards filling this whole area, and basically we have a support down over here, right? This is a trade I've taken all past week and the week before that, but it's really, really important to wait, right? Because you're waiting. Now let's go over this again. So we didn't have this area right over here. All we had was this bullish candle right over here, and someone took a buy. Now there's not enough range, so obviously you can't take a buy, you have to wait. You either have to wait for price to break above this resistance, or you need to wait for price to break this minor support to continue down. So what you're doing is now here's the trick, right? Sometimes what guys are going to do is that they will take a sell if this first bearish candle starts breaking the low of the previous bullish candle. This is very bad. This is very bad because since this is a big bullish candle, it means there's very high volume in this bullish candle. So you cannot sell this candle breaking the low right over here. What you would need over here, however, would be a small bullish candle. If this was a small bullish candle, then you can, with experience, with practice, you can take a sell as this candle starts to break the low. But if it's a bigger one, you have to wait for this bearish candle to close. Because if this bearish candle is going to close like this, then you're executing on the next candle after it breaks the low, right? Once it breaks the low, you're executing at that point. That's impulse entries, right? So you need to do a lot of practice. You need to see it happen over and over again. This is not a for sure way of success. This is a probability it happens. I took around 8 trades, 9 trades, same exact setup, all wins, right? On Thursday, I think a Thursday or Thursday or Wednesday. Thursday or Wednesday, I think it was Wednesday because Thursday was Thanksgiving. On Wednesday, I took a trade, same exact setup, didn't work, it was a loss, right? So that's the kicker. Now, when you take these trades, and most of them are winning trades, what are you going to do when you encounter a losing trade, right? What are you going to do? There's a probability. There's always going to be a probability a certain setup is not going to work out. So this is what happened right over here. I took the sell and it didn't work out. It's a probability. So when it's a probability that play, you got to call it a day, right? So impulse entries, these things work. The only thing is you have to learn how to manage risk with impulse entries, right? For people who are in market fluidity, this idea is explained with risk management in the database. If you are not in market fluidity yet, that's still fine, right? With practice, you can still learn it. You can still focus on it on the live streams. We also talk about this over and over again. So, yeah, man. I think this was a really good example for the weekend. Absorb this information, keep it in the back of your mind, and when you see it happen next week, you're going to see it. You're going to remember this exact same video that Raja Banks came on, dropped free knowledge. Got it? Take care.